Here is silver on the monthly time frame, priced in US dollars, 30 US dollars right now. We're asking the question today, can silver go back to 50 US dollars, the all-time high, by this year, the end of 2024? We'll be asking that question. We'll do usual gold, silver, and platinum analysis. Plus, I'm taking live chart requests as well. And look, if you're watching this on the replay, use the time codes below to go to the favorite part you want to go to straight away. But look, if you're watching live, you get to enjoy every single thing we do here at Good Morning Stackers with me, Joe Main, in the first 1 minute of the show. However, we do the synchronized slurp. That's where you grab a tasty beverage and I grab my tasty beverage and we slurp our beverages, the tasty ones, together. It is the honor system. You have to slurp it wherever you are within the world. And we've got a lot of people watching. Here we go. In 3, 2, 1, go. Ah, fantastic. Lots to talk about today. Of course, this show is brought to you by Perth Bullion Exchange, perthbullion.com.au, and WealthStack, wealthstack.com. We'll do the shout outs a little bit later, get your questions in, etc. But we are going to ask the question, silver back to 50 US dollars this year? Question mark. So this is the tradingview.com website. As I said, the monthly timeframes, this goes all the way back to the peak of 2011 at 50 US dollars. We've seen that large consolidation all the way down. The bottom, and this is what I really kind of call the bottom, really, even though technically it's not, at $13.70, $14. And then you had the COVID spike. But you can see very clearly on the monthly time frame, if COVID, and of course you can't account for black swans, if COVID had not have happened, if there was not a black swan, which there always is at some point, but if it hadn't have occurred, you can see very clearly that would have been the bottom right there. It would have continued to be the bottom, I think, because nothing would have really propelled it down during that panic right there. But we did go down to $11 something, and then this beautiful move back up to around about $30. It failed to close above 31, which as my subscribers, and we have 620 subscribers right now. That's 8 new subscribers since overnight. So hit the big red subscribe button to join the family. We have failed to break over 31. It's a very key level right there. And as you know, let me pop on this. Actually, I'll show you right here very quickly, just so you know, the big macro move. Here is $50 and here is so the vertical line is $50 and the horizontal line is basically the end of, so you see that cross right there, horizontal line, the one going that way, like the horizon, horizontal, is $50, and the vertical line, the one that goes up and down, is the end of 2024. So right at that point there, that's where you've got to get to for silver to get back to 50 US dollars by the end of this year. I'll give you the short answer, okay? But then we'll take a look at the possibilities. The short answer is probably not, okay? But it's actually doable. So there is a percentage chance. It's not a 0% chance. There are some people I posted on, posted on a little forum earlier this morning, saying no chance at all, no chance. It's like, nah, there is a bit of a chance. There is a pathway to it. I would probably give it, at the moment, first look, I'd give it maybe about a 20% chance that we could hit 50. Yeah, call it 30 if you're 30% if you really want to be generous, but maybe you're 20-30%. But let's take a look at how it could be doable, and let's take a look, obviously, what are the hurdles along the way, and we'll take a quick look at the intraday as well. So we'll pop on our indicators, okay? You've seen these for a long, long time. I'll probably get rid of my best buy zone. Just bear with me a second. Of course, get your chart requests in. If you have any chart requests, I'll do those. I'll do at least one of them. I'll pick maybe the one that everyone wants to see the most. I'll probably do one chart request and I'll do it live. And preferably I want it to be a chart that I've never seen before, so I'm taking a live look. Let me just get rid of, I want to get rid of the rectangle, the best buy zone. I want to get rid of that for now. Okay, so here is $50 right about there, and that's 2024. So that's that cross area right there. This is let's do a quick little bit of percentage move. That is from here, round about that $30 mark, give or take a little bit. That is a 60% move. That's a 60% move from here right now. Okay. There's your 50 US dollars. That's a 65% move, I think, from where we are right now. Yep, at 30 US dollars. That's a 60% move. Okay. Let's see, have we done 60% moves in, we're talking, so August, so all of September, all of October, all of November, all of December, in about a 4-month period. So what we can do here is we'll use a bit of, let's do it on the weekly time frame. I think we'll do it there. Yeah, so there's your 65% move. Okay, let's do some price ranging and see how much time we have. So that's around about here. It's not going to be exact, people, but we'll do it from the start of this week till the end. So you're looking at 126 days or 18 bars, whatever you want to call it. Okay, so we need to find areas in which has it been done before. So obviously, I think the very obvious one, but again, this is the very obvious one here is, of course, the move up to, and this is back in March of 2020 to around about August of 2020. So if I pop that around about here-ish, let me pop in a little bit closer. That is about, there we go. We'll take it from there-ish. Close enough for Jazz? Cool. So that's about 18 days, and that takes it to about there. Okay, so we'd already had now this is interesting. Okay, we'd already had the COVID low. So what we could probably discount, although no, you can't discount it because the run-up was the sort of the aftermath of the COVID low. Okay, but out of interest, if we factor in, this is the pandemic area, go back to the price range, what's this move? From around about here to here, that was a... Okay, well, that was a 115% move. So we only need a 65% move to get from now until the end of this year to go from $30 to 50 US dollars, roughly. And back in the pandemic era, though, and this is what we have to take into consideration, we did have a 115% move in that same kind of time frame. Okay, I would probably call that, yeah, it's an outlier. Maybe. Let's find out, is there another one? Okay, let's look for some big spikes. We'll go back to the monthly, and let's go back actually to, well, we can go back to here probably, is probably a great idea. Let's go back to the bull run of 20, from about 2009 to about 2011, right here. So let's see, that's 4 bars. I don't want 4 bars. I want 18 bars. Thank you very much. Once again, hit the big red subscribe button to join the GMS family, because you do get, no, that's not what I wanted. You get a warm and fuzzy feeling when you do. On the weekly time frame, that's what we wanted right here. There's your 17 bars, and we'll turn that into 18 bars. 20, and I want 20, I want 18. Again, doing this on the fly live. That's what I love to do here at Good Morning Stackers, your weekdaily live show. Pick a point, people. Let's just pick a point. Pick a point, pick a point, pick a point, pick a point. I won't take it from the blow off top. Okay, let's take it from a reasonable breaking out move. Okay, so let's take it from here to about there-ish. Does that make sense? Again, I am doing this on the fly, by the way. I hadn't pre-done any of this, pretty much. So that's about a 4-month move. Hey, that's cool. That works out about right. So what's that? Let's see. That's from about there to about there. Okay. That's a 70% move, 72% move. Okay. This is not in a time of panic. This is not in a time of a pandemic or a black swan event. So there is a case to be made that in that amount of weeks, 126 days, you can pump. And that's around, as I said, that's a 70-something% move. So it is doable. Now, there are a couple of factors involved. You would have to assume that there's a lot of demand going on. And of course, I was purchasing, it was when I was first purchasing. It's actually around about here. When I first purchased precious metals was in September of 2010. And that's when we saw this huge move. And this is exactly the point. Very quickly, a little bite of history. When I started stacking precious metals, I started looking into it at around about May, June-ish, roughly something like that. It took me 3 months to really do my research. It took me 3 months to actually pull the trigger. So I was kind of skirting around. And from about the time that I started thinking about it, was around about your $17, $18. I started only purchasing around about here when we got to the 24, 25 US dollar mark. It took me that long to make my decision. Of course, I need to take that time, but once you think don't wait too long, because these kind of big moves can happen, particularly if you're in a big bull market. So don't always wait too long. Okay, do your research, but don't get into analysis paralysis as I did back then. But out of interest, that's a very clear move. Do we have any other clear signs? Let's have a quick look here. Let's see. We'll do that, and we'll copy and paste that move right here. Any other areas we're talking in? What's this? Well, see, now, obviously, as you get lower, as you go back in time, this is a logarithmic chart. So as you get lower down, right, the percentage moves are higher. Okay, does that make sense? Because this is not a linear chart, it's a logarithmic chart. So let's take a look at, I don't know, is that about right? Let's see that from there to there, roughly. Is that about it? Yeah, ish. Let's talk about that. What is that? Kind of from about there to there. Yeah, it's a 40, 50% move, something like that. But I will keep it at this. There are precedences, even not within a black swan pandemic kind of panic kind of level, where silver can go in 126 days, in a 4-month-ish kind of period. It can do that kind of percentage, that 65, 70%. The big question is that likely this time around? Are we in the depths of a new bull market, or I should say a start of a bull market? So let me pull that off there and get rid of all that. And let's go back to, we'll discount the pandemic stuff, okay? So once again, this is this level right here. Let's take this date range again. 18 bars right there. And there's that 65% move that we need. So, as I've been saying, we had been in a bear market for quite some time. And from the peak of 2011, right here, all the way down, 14, COVID low. Then we broke back out above 26 US dollars. As you know, 26 is a big level in the sand. I'm going to get rid of that because it's really annoying. Big level in the sand, line in the sand at 26. Failure to break and hold above 26 US dollars for any significant period of time. It did it for like a month maybe, then back down. Here's your 26 level here, right here. It's a very key level that we needed to jump and stay over for for a significant period of time. We tried here, failed, tried here, failed, tried here, failed, moved down back to your $20 area. Finally, we broke out of this symmetrical triangle pattern right there. Once we broke out, that was a very good sign. Once we broke out of this $26 area, I was saying we are 99% in a bull market now, of a new bull market. You could very easily have called it down here, but if you bought down here and during the COVID low, fantastic and good on you. But we really needed to see confirmation of closing above $26 for a significant period of time, or at least for a few months being above it, in order for me to be confident. You might be different. In order for me to say, new bull market for years and years and years to come. Now, could go up and down. We could have flash crashes and all that kind of stuff. We could consolidate for a while. Could it go lower than this right now? Absolutely. But I think just in general, we're in a 99% bull market. What makes me 100% sure, meaning, barring black swan events and, flash crashes and things like that, but the general direction is up for the next years and years to come. What makes me 100% is anytime we close above 31 US dollars. So that's the big line in the sand for me, as all my subscribers know, and my 8 new subscribers overnight are finding out. Final hurdle, okay? Close on the monthly. So we need to close any month above 31 US dollars. Until we do that, I have to give $50 US silver by the end of 2024, a 5% chance, probably a 1% chance. If we close any month, so if we close, well, I've only got a couple of days, and I don't think we're going to do it in a couple of days. If we close this month above, not just at, but above 31, and what do I mean by close? As you know, not a spike. I don't want to see this spike. I want to see the the solid here above 31 US dollars. Again, not at, because that can be at resistance. I want to see it above. So call it, 31.20, 31.10, 31.20, something like that. Once we do that, then I would move my 5% chance of seeing $50 in 2024 to probably a 20 to 30% chance. Definitely less than 50%. I don't think it's likely. Okay, but there is room to do it, okay, because we've proven that before with the previous bull run in 2010, or, the sort of in the midway of that. So it is doable, okay? Once we're above 31, I'll give it a 20 to 30% chance, but while we're below 31, maybe a 5% chance at this stage. But we close a month above $31, and that's looking, more positive, but less than a 50% chance of that. What's more likely at this stage, if we do close a month above, if we close the month above 31 US dollars, this area here gets more likely. And I've had this purple box drawn in for a long time now for my regular subscribers. It's anywhere between 37 to 40 US dollars. Am I saying it's definitely going there if we close above $31, this month, next month? I'm not saying that, no. But it just becomes more likely, obviously, because that $31 is a very clear level. It's a very key Fibonacci level as well. So that's just for me. You may disagree. I would watch out for, and that's why I drew in this purple box range, okay? And I've got it here, the Fibonacci level from the very old high of 1980s and the very old lows of 1990s. The key Fibonacci level is at $38.50 US cents. That would be the next major area of resistance I'd be looking out for if we break 31 and we just career up and up and up and up. I'd look for that area to be definitely tested. It could be low, it could be lower. That's why I'm putting this sort of range there. So if we close above 31 any month this year, the chance of $37 to $40 becomes higher. You'd give it maybe a 60% chance, maybe just a little bit more than 50%. But yeah, I wouldn't definitely say it's going there. So that's my call. Silver back to $50 by the end of this year? Probably not. Only a 5% chance now. Close above 31 US dollars, give it a 20-30% chance. That's still a decent chance, okay? If something really projects it that way, something economically happens, politically, of course, coming up with the election in November. What happens in November? No one has an idea. If you think you have an idea, look, the big philosophical thing, if you think you know anything, you're wrong. If you think in terms of all we know is that we exist, and that's pretty much it. But if you think you know who's going to win in November, you have no idea. If you think you know where silver is going to go in, a few months' time, you've got no idea, and neither do I. So that's a big if, though. Who wins in November? You never know. That could propel the price up to that kind of $50 level, depending on what happens there. Will there be a winner of the election? Will the election be completely contested, which is quite likely? Will there even be a result of the election? Could that take months down the track? That's quite possible. So with more uncertainty, obviously that's where gold goes up. People run to gold, but then silver does follow as well. So that's the pathway, I would say, to 50 US dollars by the end of this year. Something like that, and like the election being contested and big, uncertainty. Yep. But if we're just talking normal price action, probably not. So that is that. Let's take a quick look at the intraday very quickly, because then we'll do gold and platinum as well. And I'm going to take your live chart request as well. I will do one of them. Then I've got to get out of here because I've got a meeting to go to. Let's see. This is silver on the daily time frame. Okay, we are still below this downtrend line, so we're just in a trading range. Good to see us above the back in business line. That's 29 US dollars. So look, while we're between $29 US, and this downtrend line, it's just in a no man's land territory. I'll pop on the relative strength index to show us a general direction that it could head. This is the relative strength index right down here. So we are trending up on the relative strength index. We're just at a kind of a bit of a resistance here. Look at the weekly time frame. Yeah, and here's the weekly, okay? Right there, we're just in this no man's land area. As I've been saying, while we're above the back-end business line of $29 US, we probably will make a play for this $31 area. Again, we want to close that on any month. That's very bullish. But yeah, no man's land for the moment. And on the weekly time frame, we are still below this downtrend line on the relative strength index. Okay, it's probably not until we break above that we can be very confident to say that, you know, higher prices coming in 2024. But we're not there yet. Okay, so that's all you need to know for silver. We'll get to gold, and we'll get to platinum, and we'll get to the live chart request. But of course, I miss my GMS family every single day. When I stop this show, I go, where are you going? Come back. So of course, we're going to do some quick shout outs right here. Mark, Florida. Pete Repeat says GMS. Now, Pete Repeat, very quickly, I will do all of this at the same time. Pete Repeat has allowed me to read a review of Perth Bullion Exchange. Now, who's Perth Bullion Exchange? You know who Perth Bullion Exchange is. Perth Bullion Exchange is my first brand partner, and I have two of them. I've got Perth Bullion Exchange and Wealth Stack. Okay, so Perth Bullion Exchange are the place. They're my preferred brand dealer. Okay, my preferred physical bullion dealer. Okay, I've worked for 3 major bullion dealers, as you know, here in Australia. You all know you know my face. You've heard my voice on all the, you know, Bullion Now's YouTube channel, Ainslie's channel, and all that. As you know, I've been the social media guy. I served thousands of customers in my time, but I also became the social media guy, doing all the content creation and all that stuff, all those epic unboxings, everything you've seen in Australia. That's basically me up until a certain point where I left the bullion industry. Okay, the retail industry, I should say. But Pete was saying, and we'll do some shout outs, etc. But he sent me an email right here, and he was very happy for me to read it out. So let me just read it out very quickly. This is from Pete. He says, "Hi Joe, hope you are well. I'm sending you this email because of the outstanding service I received from Perth Bullion Exchange. My 3-month free storage was almost up, so I sent an email around 2:30 p.m. on the Monday afternoon. Perth Bullion Exchange got back to me promptly, and I paid the shipping amount." So he requested his free storage stuff to be shipped out. Did around about 2:30 p.m. The order arrived this morning, so this was yesterday. So the next day, right? Arrived at Tuesday at 10:40 a.m. just after my show. I have never had an order processed, picked, packed, shipped, and arrive 16 hours later from across the country ever. A big thank you to Ricky and the Perth Bullion Exchange team. I will be an ongoing customer. The top 12 ounces. So he sent a picture here. Give me 1 second and I'll get a picture up of that. So this is kind of going to be like this is my little brand partner plug for Perth Bullion Exchange. I won't go into any other stuff because I think this just basically kind of speaks for itself. It's at perthbullion.com.au. Again, my preferred brand partner. Let me just show you these quick little things right here. That's just really great, Pete. Really great to see that Perth Bullion Exchange is doing such a great job, which they are. So he says right here, I've got a couple of pictures to share. Let me share the screen right now. So this is what Pete Repeat received in the mail, okay? And let me read out what he said right here. The top 12 ounces are all buybacks, so the 1 ounce buyback silver. The bars and below are all BU, brilliant uncirculated stuff. So brand new, but brilliant uncirculated. Have a great day. So the top 12 ounces are buybacks, okay? Let's check out some of the buybacks received from Pete Repeat in the buyback section of the Perth Bullion Exchange, perthbullion.com.au. Now, this is not going to be indicative of what you're always going to get. Ricky at Perth Bullion Exchange did a big order of buyback stock. There wasn't actually stock sold back to Perth Bullion Exchange. He actually just wanted buyback stock, so he actually went the wholesale route and contacted one of the big wholesalers in the United States, actually, I think it was, and they had a whole bunch of buyback stuff. Okay, so he bought it from them. So Ricky didn't pay spot for it. He paid spot plus, extra. But he put it at a buyback price on the Perth Bullion Exchange website, perthbullion.com.au, and it included Kookaburra monkey privies, 2016. Okay, this is all in the buyback section. Okay, spiders, funnel web spiders from 2016, and then your more cheap and cheerful kind of stuff as well. Okay, your buffaloes and things like that. But you do get these kind of extra little gems in buyback. Now, that's not always going to be the case, and you don't get to say, hey, Ricky, or any bullion dealer, never do this. Again, this was one of my secrets of the bullion dealers thing. Don't email us and say, can I have something special in your buyback? Just say, hey, if there's anything special in there, I'd love it if you have the opportunity to do so. Don't be pushy, okay? Don't say, I want the best stuff you've got. Then you're not going to get the best stuff that they've got because you're just being pushy. Don't be that guy, right? Don't be that stacker. But look at this. 2 monkey privy kookaburras from 2016 and 2 funnel webs. They're extra special ones, right? So they're great for buybacks. And this is the other one as well. That's the sort of the longer one. So great haul. And this is the new stuff that Pete Repeat bought. So that's just a great range. And look at that buyback stuff. That's just really good. And this is interesting. This is how it came packaged, okay? You got all these bags and all that sort of stuff as well. So it comes with all the accoutrements, as they say, and really well packaged usually, and the bags and all that kind of stuff. So, and that's just for buying silver as well, not even just buying gold. So there you go. Big plug for Perth Bullion Exchange. While I'm here, I will talk about WealthStack, wealthstack.com.au. If you don't want to be the person who only buys physical, and maybe you're happy, and I've certainly have been in past, to do unallocated gold programs where it's real physical metal. It's backed 1-to-1 with real physical metal. Okay, all that stuff. And trust the company, as I know now and trust this company, WealthStack, wealthstack.com. They have an amazing phone app, and you can also use the desktop app right here. I have a phone app which is available on Android and iPhone. Let me show it to you right here. This is where you can save and invest in physical gold. Okay, it's an unallocated gold program with a few extra perks, and I'll tell you those in a second. Here's the team, the leadership team. We did an interview with David Ski just a couple of weeks ago. Go back on my channel and find that. But right here, you can find it on the App Store and on Android. Okay, here it is. It's free to sign up, and that's what the icon looks like. Look for WealthStack on the App Store and WealthStack on, you can't really see that properly, but there's the icon on my top right over there. WealthStack, one word. Okay, and it's a great way to save and invest in gold. But you get the added benefit. So it's real physical metal. Read their frequently asked questions page. Go to the website, read the frequently asked questions. You'll see that it's real physical metal backed by one of the largest wholesalers and storage facilities in the entire world. Okay. And you also get the extra security, the extra knowledge that your claim of your unallocated is real. Okay. And you get that in a form of a blockchain-based token. Okay, now this isn't crypto. Okay, don't worry about that. This company isn't a crypto company. All right, it's an unallocated gold program. They're actually going to be doing silver and platinum later this year as well. But if you want to buy a minimum of $10 worth of gold backed by real physical gold, you're only paying spot plus 1%. Did you hear that? Spot plus 1% for buying $10 worth of gold. Okay, you can buy $1 million worth of gold if you want, and it's at spot plus 1%. But normally, if you want to buy gold, and of course, physical gold, you've got to buy a kilo bar probably to get spot plus 1%. As you know, the smaller fractions of gold that you buy, the higher the premium becomes. So if you want to buy 1 gram of physical gold, you're talking spot plus 15%, probably at least 20% even, maybe even more, depending on the brand and all that kind of stuff. But you just want to buy $10 worth of gold, spot plus 1%. Then anytime you want to sell your gold, it's spot minus 0.5%. The spreads are very, very good here. So download the app. There's much more to talk about. There's a debit card coming as well. That's later on in the year where you can tap your card or tap your phone, and spend real gold. Okay, that is, again, 100% backed by real physical metal with the Wealth Stack app. That's all I'm going to say about that. Check them out, and you'll hear more about them later on down the track. We'll get to the gold and platinum analysis. Just some quick more shout outs. Let's see. Mark Florida says, Joe, I will gladly add, I will gladly add the $50 gold to your other one for, gold by the end of the year. Yes, you're being sarcastic. I didn't say that. I know you know I didn't say that. Only about it again. I gave my percentage chances right there. Lexio says, could you? Good morning, Joe. Could you explain the candles? What the size of them represent? Thick lines, thin lines, etc. Yeah, happily. Or a link to source. I'll do that in just a second. So if we get a live request for a chart request, I'll do that in just a second, and then I'll talk about the candles. It's very easy stuff. So yeah, happy to do that. Morning, Joe. Morning, Jason Ashworth. GMS says Ash's Golden Ventures. Danny, of course, great to see you. So Lance has gotten in. Lance got in first. Chart for GDX. Yeah, that's a good idea. GDX on the ASX. Okay, so you're talking about the gold mining index on the Australian Stock Exchange, if I'm right. Jason Ashworth says Trump wins even if he doesn't. Or does he? I don't know about that. There's a brand new superseded indictment this morning, overnight. Did you hear Trump's been indicted again? And it's basically, he got indicted for these charges. The Supreme Court said, no, you can't charge him for that stuff. And then Jack Smith, the piece of whatever he is, has gone back and gone, well, I'm just going to put them in again. So he's just repackaged them and he's been indicted again. Okay, well, let's see what happens. Who the hell knows? Silver hype. Now, as you know, I'm not a silver hype boy. I'm not a moon boy. All right. See, Chris said, at least he didn't say 300. Yeah, exactly. I'm not a moon boy. As you know, I don't give predictions. I give my percentage likelihood chances. But I did want to talk about, could silver get back to 50 this year? Because it is doable if we're on that 2010 style kind of run. So it is doable. I just don't give it a large percentage at this stage. Jason Ashworth says buybacks are the best. They are the best when you're a good customer and you're not a pushy customer and you just kind of casually and nicely ask, and then you might get, and in general, bullion dealers want you to be happy with the product. So they'll always, if you're a nice person, they'll chuck you a good one, one or two good ones if they can. Okay. I was certainly part of that. Unfortunately, 6 or 7 will be gifted. I don't know what we're talking about. 6 or 7. Oh, sorry. Pete Repeat says that's your thing. So unfortunately, so you're going to gift 6 or 7 of those buybacks. Okay. Keep a couple of the good ones for yourself, please. Okay. So let's go to, finally, we'll do the gold and platinum, and then we'll quickly look at GDX. Okay. Wonder why we've got less watchers today. Don't know why. We don't have Tony Peterson watching. Oh my goodness, that's probably why. So let's go back to, that's not what I wanted. That's what I wanted. Let's take a quick look at gold and platinum. Then we'll do GDX on the ASX on the stock exchange if we can find it. So this is gold on the daily time frame, priced in US dollars, 2,525. We've bounced. Okay. This is what we wanted to see. We wanted to see us remain above the uptrend line right here. You know what this is. This is the uptrend line going through the recent all-time highs that have been just going higher and higher. So this is from April to now of this year. April this year to now. This uptrend line, very clear. We broke out above it. We made a new all-time high, 2,530. We came back to test it. We had a failed breakdown, which is a great sign to see. A failed breakdown. We went back down to this 2,470 upper line in the sand, which I had drawn in previous to us hitting it. We hit it bang on the money. It was a failed move to stay below. So it was a failed breakdown. Oftentimes from a failed move comes a fast move in the opposite direction, back above the uptrend line. So that's very positive to see so far. We were looking a little bit, how's your father, yesterday. But we found support still above the uptrend line. So that's great to see. while we remain, and this is all I'll say, and I'll get to platinum and I'll get to the chart request, while we're above this uptrend line, that's pretty much all you need to know. We're going to push for the next sort of major resistance. The next major resistance is 2,650, give or take $20. Why is that? Because it is the mother of all trend lines, as you know, going back all the way to 1980. Here we go, right here. I should have just put this on the quarterly chart. Duh. This is the monthly chart. Right here, see that? We're coming close to it now. This is the 1980 price back here at 880 US dollars. This is the second point right here, or the first point in the trend line. So when we peaked at 1,920 US dollars per gold ounce in 2011, it formed this trend line, and it is the mother of all trend lines. Okay, I think we will find resistance here, at least maybe on the weekly time frame, but you're going to find resistance. What we don't know is it going to find a bit of resistance and then punch through and just onwards and upwards we go? I don't know. Okay, but that's the area at around about, it depends when it hits, 2,650, give or take $20 roughly, but that will be an area of resistance. So that's all you really need to know. It's looking positive on the weekly time frame. Okay, we're halfway through the week and we bounced off the trend line, and that's really good to see. So we're moving in the upward direction. On the weekly time frame though, the other thing you need to take into consideration is we are already back in extremely overvalued or extremely oversold for gold on the weekly time frame. We just did it here and we're already back here. Okay, at some point, profit takers are going to take profits. Okay, so I don't know where the price is going to go, but you need to know when we're in extremely oversold or extremely overvalued for gold on a time frame, it doesn't spend forever there. It could spend a decent amount of time, but it will eventually tick over. When it ticks over, we don't know, but we're getting towards the top end of this. We're getting towards this mother of all trend lines as well. I tend to think that could be an area where people would want to take some profits if they have been buying, all the way down here through, through COVID, etc., all that sort of stuff. If they've been even buying down here at, 2,200 and something, and it goes up to 2,600 and something, people will take some money off the table, I'd imagine, because there becomes uncertainty here. Does this become a triple top, and then we see, a move back down to say, my best buy zone, which we haven't hit yet, by the way. It doesn't mean we will, but that's still in play. It's very unlikely at this stage while we're above this uptrend line, but it's there, 2,250, and it went to 2,150 with a spike to previous all-time highs of 2,080. It's doable. It's a much less percentage chance, but we need to see what happens when we get up here. There's going to be a little bit of indecision, I think, at around about that point. Again, because we're in extremely overvalued for gold already. Okay, just keep that in the back of your mind. Monthly time frame, and in monthly time frame, we're already there, man. Extremely overbought or overvalued for gold on the monthly time frame too, and coming up to the mother of all trend lines. Just watch out for that area is all I'm saying. That is gold, but positive while we're above this mini uptrend line right here. Okay, so positive while we're above there. Watch for the breakdown. We don't want to break down back to 2,470, which means it's likely to be taken out, which means likely that's going to be taken out, which means more likely that's taken out. Bump, 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 bump. Okay, just got to watch for that kind of cascading event. But we're not there, so don't stress. That's gold, silver, and finally platinum, and then we'll do our quick little chart request, then we'll get out of here. Platinum, I remain, as you know, in the depressed zone simply because we're in the depressed zone. So right here, between here and here, I'm depressed for platinum. Until we close above there, I start getting like, interesting. Okay, we will see this head and shoulders pattern invalidated, and that's actually quite positive for platinum. So until we're above this long-term downtrend line from February of 2008, as you know, for my subscribers, there's the long-term downtrend line, February of 2008. Once we're back above there, I'll start getting interested in platinum again. For the moment, it's more likely that we head down to my best buy zone of between 900 to 750 US dollars. The thing that would be opposite to that is the relative strength index on the daily time frame has been tracking up, so that's a positive sign. That's pretty much all you need to know for platinum. Do you own some platinum? Post a comment below. That's gold, silver, platinum. Gold to silver ratio is still around about its support level. I'll just leave it at that for that. So let's take a look at GDX. We've had a chart request for GDX, and that's on the ASX. Now that's going to be GDX. Sounds like a gold miners index. Let's take a look. Yes, see, I've been watching the GDX. Oh no, okay, GDX it's a VFE, yeah, ETF units. Okay, it looks like it's an Australian gold miners index. I think I could be wrong, but let's add it. Right there. No. Okay. Someone can tell me exactly what it is. So I'm looking at GDX for the first time. If you want to tell me what it is exactly, it doesn't really matter because I'm just going to look at, excuse me, I'm going to look at the technicals. I don't really care about the fundamentals. I'm only looking at the technicals. So here's what I do with live looks of things for the first time. I do a couple of bit of support and resistance. I do some Fibonacci and I do some trend lines, and that's all you need to know. Got to get out of here real quick. Pretty soon after this, we'll do some final shout outs, etc. Final comments, and we'll get out of here. Here is GDX VE Gold ETF units. I don't know if this is a mining stock index or whether it's an individual stock, but let's take a look. Very clearly in an uptrend. You can see right here. Do some quick horizontal lines. Where are the obvious ones? Okay, so around about there, that's obvious. Round about there, do I call it the spike? No, that's a very clear high right there and a very clear sort of line in the sandish. You could probably put it based on the monthly closes. Let's call it around here-ish. Does that make sense? Yeah, call it there. So that's at about 40 Australian dollars. Now, bear in mind, anything that I talk about with this stock is now Australian dollars because we're using the Australian stock market, okay? This is not US dollars. This is now, everything we were talking about before was US dollars. This is now Australian dollars, okay? So there's your two major support lines, and your trend line, definitely going to go through there. So what happened was we broke through. We made a play to break through, and it was a failed move. But then we just broke through. There we go. There it is right there. Can you see the breakout and the retest? That's a very positive sign for this particular ETF unit thing. Okay? Whatever the fundamentals of this thing is, I don't know and I don't care. I'm just looking at the technicals. Right there, you have, this is interesting. It's looking very positive for this particular thing. Okay? You broke out, and there's, look at that. Broke out and retest on the monthly time frame. Okay? Breakout, and you came for the retest. That's exactly, and then the bounce off. Very positive looking for this, I will say. I don't know what this is. I don't know what it does. I don't know the fundamentals. I don't know who the CEO is. I don't know if it's an index, whatever. So I cannot account for black swans. But at the moment, it's looking pretty good. On the relative strength index on the monthly time frame, it's also trending up, and we have not spent any time in extremely overvalued for this particular whatever it is since August of 2020 within the pandemic kind of area. Okay, so it looks like it might be creeping up. Might be. I don't give financial. By the way, this isn't financial advice. All that stuff, you know that? Are you smart enough to know I don't give financial advice? Yes. Good. Don't be that guy. Don't be that stacker. Don't be that investor. Okay, not financial advice, but it's on the upward direction. Okay, the fact that we're coming towards the end of this month and we are nearly at opening. Okay, we'll talk about the candles in just a second. That looks pretty good. Only a few days to go. Could this even potentially break up from here? And I'll show you. This is where we'll talk about the candles for just a second. Could it close above this level that it opened at, and then this becomes a green candle instead? Very bullish, I would say, for this, if this becomes a green candle instead of a red candle. What are we talking about the candles? Just very quickly for the person who asked. Obviously, these candles indicate the opening, the closing, and the spike above and the spike below of a particular asset. Okay? So I'll give you an example. Right here, this is a green candle, all right? So what that meant was and this is a month, and this is true on for every month. It's true for the 1 minute time frame. You get candles all the way through to pick, infinite time frames, right? But for the month of, let's see, the month of July, what happened was it opened here. So the thick, the filled in part denotes the opening and the closing for that particular month. So this month, and you can actually see on a chart, if you look above right here, see that? So O for opening price, H for high, L for low. So the highs and the lows are the spikes, okay? And C for close. So the open and close right there. If you hover over, if you're using the tradingview.com website, let's look above right here when I hover over. So you can see in July, it opened at $51.45 Australian dollars right there, 51.45 cents, right? So it opened there. Then we had a spike. So the high, so the H up there, the high is 58.80. So it went bup, 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 bup. And then, sorry, let me start again. It opened, and then I don't know how it went, right? But it opened, it had a spike low down to the low of $50.50 Australian cents, $50.50 Australian. And then it went blub, 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 blub. It spiked all the way to the high of $58.50, but then it went back down, and then it closed at the C level there, which is $57.26 Australian cents. Okay, so that's what that means. That's the close, that's the open, that's the close. So whenever you open, so let me start that again. If you close the time frame above the open, that's when you'll get a green candle. So if you close the month above where it opened at, you're going to get that green, okay? On the opposite end though, on a red candle, that means it opened here, it spiked to here, it spiked down to here, it went back up, and it closed below. So when it closes below the open price, that's when you get a red candle. Does that make sense? That's all you really need to know. So for example, for August, and we've still got a few days left to the end of August. So far, at the start of August, it opened at $57.60. It spiked all the way down, or maybe it spiked up first. It maybe spiked up to $58.80. It was a fake out. Then we went blub, 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 all the way down to $52.90 in Australian dollars. And then the buyers went, well, that's a bargain. Gobble, gobble, gobble. And we've gobbled all the way up here back to nearly where we opened at. And there's 3 days left to go. It would be very bullish, I would say, if you, in the next 3 days, by the close of, it actually has to be the close of business, I think, this week, because it depends where, it probably does, actually. So it has to be by Friday business, end of business. It's got to close above 51.62. If it closes above where it opened at for this month, it becomes a green candle. That kind of big spike like that, closing green, really bullish, I would suggest. Not financial advice. Finally, I'll do some Fibonacci to see what potential levels are coming next if we break all-time high. And let's see, does Fibonacci work from a particular high and low? And does it predict? Can we use hindsight to see, does it predict a particular high or any kind of major support levels? Okay, so let's look at Fibonacci. I'm going to take it from this high as the most obvious one. And this recent low. Okay, do we see any confluence right about there? Okay, so I'll get rid of the horizontal lines for a second. Let me move that. Horizontal lines. Okay, so this is the Fibonacci. Are there any kind of areas of confluence? Ish. It certainly didn't predict the high there. It's a little bit shy of that. Maybe do I take it from when it started this index? Maybe do I take it from here and here? Is that a little bit more productive, as in predictive? Let's see, from that high and that low. No, I wouldn't say so. So I will go back and take it from here and here. So this is going back to 2016 of the high of $40 roughly. And the low. So maybe Fibonacci isn't particularly good for this particular one, although do we see any levels? Yeah, I mean, you can see here we clustered around the 0.618, so you definitely found that was there's the COVID spike right there. See, that's the March 2020 spike down in where every asset just went, oh, panic, 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 okay? If this hadn't have occurred, you probably would have seen this. There you go. The 0.786 Fibonacci from this high and this low gave you this little support level here. So we did find some support there. Yeah, you can see some support at the 1.618. I wouldn't call this particularly predictive, really, for this particular asset. You did find support around there at the 0.786. Interestingly, your closes for the month are interesting. Look at this. Don't look at the spikes. Look at the closes. Okay, close bang on the 1.618, which is an extension level from this high and this low. Okay, so that's there. And then closing months around about there, little spikes, etc. Yeah, it's somewhat predictive if you want. I wouldn't call it bang on the money. If you wanted to say a general area of if we break the all-time high in this particular index, I would watch out for the next major move would be, well, look out for there at about $68, but that's so close to the previous all-time high that you're probably going to shoot through it. The next major one is here at 96 Australian dollars. I keep saying US dollars. 96 Australian dollars. That's close to your psychological value of 100, but you might find that people front run the $100 psychological value. If it ever gets here, I'm not saying it does, if it ever gets up around here, and people will go, oh, the psychological value of 100 Australian dollars for this particular whatever this thing is, they would probably front run and start taking profits before then, because that's what you do, right? Psychology comes into play and you go, well, if everyone's going to sell at $100, I'll sell it a couple of dollars below. And then another person goes, I'll sell it a couple of dollars below that. So around about maybe your $96 area might be an area you'd take some profits, probably somewhere between $90 to $90 to 96 is where you'd want to see some profit taking. You probably see it around about there. So that's it for that particular thing. Don't know what it is, don't know what it does, don't care. Well, I probably do care because I might want to actually have a look at it myself. So that's interesting. I will mark that one down in my little blue one right here to keep an eye on it. Okay, interesting. It looks really positive for this particular whatever it is. That is GDX on the ASX, the Australian Stock Exchange. That's it, people. We'll do some final stuff right here. Any final comments? Jason Ashworth says, as silver is used mainly in production, it has to be artificially undervalued. Yeah. Otherwise, the thousands of applications it is used in would become too ridiculously expensive. Not really. No, I don't think that's true. Because I've forgotten what it's called. There's a law or a rule. I've forgotten what it's called. But because it's used, and look, it could be true. It could be true. But the argument against that is because silver is used in such small amounts. Now, I think the analogy was, or the example was Apple computers. Okay. It was something like, there's X amount of silver in an Apple computer. Okay. But even if silver was to go to, really, really high, it actually doesn't cost that much more for Apple computer just to absorb that cost. It's probably maybe like, at silver at a really high point, it's maybe because it's such a small amount of silver in an Apple computer, for example, it might be cost an extra $70 to $100. So, they'll just up the charge, $70, $100 on their latest Mac laptop. So it's kind of that prices can be absorbed. I do see where you're going with that, Jason. So you do make a good point. 7 says silver will never reach its real value while the silver pool is being diluted with the abundance of paper silver. Yes, at a 400 to 1 ratio. Back in the peak of the bull market in 2011, when I was stacking back then, it was 300 to 1 paper to actual physical silver ratio, and everyone going, it's 300 to 1. Oh my God, that's crazy, 300 to 1. It's now 400 to 1. So it never reached its real value while it's being diluted by the paper price. Yeah, I can see the argument for that. That's a fair point. Let's see. Hazard says, hopefully silver will follow gold very soon, as it usually does. Yes, it usually does. That's on the upside. That's also on the downside, though. Okay, so if gold were to go up another, and as we talked about, gold only needs to go up another 20% from here. Was it 20% or 40%? It's 20% from here. Yes, only 20% from here to reach 3,000 3,000 US dollars. Give me 1 second, my calculator. 2,500 times 0.5 times 0.2. Oh yeah, it is. It's literally 20%. Yes, 20% is $500. So it only needs to go 20% from here to reach 3,000 US dollars. If gold is going up 20%, you'd probably see silver going up by more than that. Generally, it tends to, it's more volatile. If you see a big 20% run up to $3,000, let's say, and I'm not saying this, let's say it does it by the end of the year. Not saying that at all, but give you that example. And that's sort of to go back to the silver at 50, silver at 50 US dollar thing. If gold was to go on a big tear between now and the end of the year and head up to, I'll do it that way, head up to 3,000 US dollars, it's only 20% from here. Silver would probably go up more, a larger percentage. That's why it's possible. 5% chance at the moment. Once we're above 31 US dollars for silver, then it gets to like a 30% chance. Silver could go back to 50 US dollars by the end of the year, but gold would have to have that big run. Where gold goes, silver follows. On the opposite end, though, if gold, for example, breaks back down that trend line that we've just been talking about and starts descending, if we have a 20% down move in gold, you can look at a 40 to 50% down move in silver. Okay, so that's why we're not out of the woods. You can have those big consolidations and stuff. So yes, it does follow, as it usually does, on the upward side, but on the downward side as well. That is my show for today. Thank you so much for watching. That has been Good Morning Stackers. We will do the final synchronized slurp, but of course we're going to do it as we kind of like dancing our seats out. I feel like I was going to say the Ellen show, but maybe we won't talk about that. That's been...
Oh yeah, we're feeling fine.
Hit the big red subscribe button to join the family. Grab your...
Have a tasty beverage. Let's get in the groove.
Let's do the...
Synchronized slurp. Now
In
we're
3,
on the move.
2, 1.
Good morning, oh yeah,
Thanks for watching, people. You'll get another live show tomorrow morning. Hit the big red subscribe button to join the GMS family. Stay safe, stay informed, keep stacking. See you tomorrow.